Hello, investors and traders. Let's jump right into it. 100% accurate 67-year bull market indicator. This has a remarkable track record. Once S&P 500 is greater than 20% off bear market lows, a year later, stocks have never been lower. We're going to go over all this, but to say first that we use high probability trading consistency. We look for data, mathematics, and analytics so we have no emotion when we invest in the stock market. So when we tell you it's 100% accurate, we're going to show you other times that the same scenario has happened. But we also want to tell you that you need to combine this indicator with a weight of evidence. And even though it's 100% accurate today, we like to combine it with a weight of evidence. As usual, one indicator does not make a strategy and should be coupled with other indicators and philosophies. But this is for sure an investing edge to know this data. Before we get into it, disclaimer, the information provided on our channel is for educational, informational purpose only and is not intended to be a substitute for professional financial advice. Protect your capital by all means. So let's go over this. First of all, let's just go into the charts and see what we're talking about here. What are we talking about? Every stock goes through, or every stock market, or every index goes through four different phases: the accumulation phase, the growth phase, the distribution phase, and the declining phase. If you know, when the accumulation phase jumps into the growth phase is a very positive time to invest. And in distribution phase, we get out of the market. And if you are a trader or understanding the shorting the market, we go into the declining phase. But we are looking for data like the presidential election cycle, like the Santa Claus rally. We've come across another data, usually at disparity. And this is the market has a huge bear market run. Now, we've taken this from the start of the bear to the end of the bear. And let's go to another chart. So let's just say that this is the start of a bear market to the end of the bear market. And the next rule we said, if it goes up 20%, and then what is the probability that we are going higher? Let's do it again. Once S&P 500 goes up 20% off bear market lows, a year later, it has never been lower. And sometimes even a month, it goes up higher. 3 months even better, and 6 months. So let's take a specific one. Start of bear market, February 19, 2020. This bear market lasted till March 23, 2020, where it went down 33%. On May 6, 2020, it officially went up 20%, which is about 12 days. And you can see the gains of 12.1, 16.8, 18.3, and 47.5. And this is what the chart looks like of what I just said. Goes down. Bear market, up 20%, off to the races. Let's go another one. October 9, 2007, this bear market lasted about 2 years, 3/9/2009, down 56.8%. And then on 3/23, shortly after the low was in, it went up 20%, which takes 10 days. And then you saw gains of 2.5, 8.5, 29.4, and 42. Let's look at it on a chart. Here we are. It went down all this period, clearly a bear market, clearly going down, jumps up 20%, and then off to the races. Are you getting excited about this information? The really interesting thing is that this has always worked. And this is not from the 20% bottom and it's up 27%. This is from the 20%, it's up another 27.8% from the bottom. Let's look at the averages. For 54 days on average, it takes for the bull market to resume, and it's 1.5%, 7.3%, 18.4, and 28.2. And then you can look at the mediums. And also you can look at the percentage highs. Amazing, amazing returns. So all we're looking for now, if you go back, which we did for each of these charts, and to see after a 20% gain upwards. So now you're saying, okay, that's past information. What about today's information? The most recent low was about 3,577, was recorded in October 2022. On June 8th, or around June 8th, we have seen the 20% high. If this system works 100%, get ready, we are going higher. Let's just give you a few caveats before we go into there. We can see each time the bear market rally has failed, and sometimes even lower. Now, again, protect your capital by all means. If you've been following this channel, you know that intermediate and long term, we are bullish. And we think we are very bullish on AI stocks and Magnificent Seven stocks. But again, we are using a weight of evidence. And even though this has been 100% right, it could be the first time it is wrong because of many factors. I just want to throw in that we combine a lot of indicators, but one indicator we like to talk about combining it is the presidential election, where usually the third year and the fourth year are the most powerful years. This must get you excited a little bit to be bullish. Now, look back at some of our other videos, what we believe is happening now, and we believe there will be a short-term pullback. But some years you don't get a short-term pullback, and this thing goes straight up. So another weight of evidence that we are bullish, intermediate, and long-term is the 100% accurate 67-year bull market indicator. You know the catchphrase: study it, analyze it, adapt it. Peace.